we have an audience and we have a panel that's all closed around a table, so it's a really weird combination of both. What will happen is you, the audience, will disappear from our view, if you like, for a little while, but not excluded from the conversation. The idea is we discuss the issue, and then we have a Q&A and you can throw your stuff on the table. What I have to do is figure out how to control these people that like to talk and are experts and have the experience that you want to hear, but they also have to share that conversation with the other people on the table. So I've got to somehow move them along without pushing them off that chair. So we'll see. I didn't push anybody off last time. Derek wasn't here last time, so we'll see. So it will be a bit of fun. That's right. He's in the firing line. Yeah. What we will kick off with, though, is the intro to who's on the panel, because you're all fabulous people and you've got some great experiences, and we want to hear a little bit. So this is the only chance you really have, where I'll let you go for a little bit longer. But just a quick intro of who you are, what you're doing, perhaps something of interest that you want to share with the audience. We might start with Derek.
Okay. Hi everyone, this is a very strange experience. My name's Derek Gerard, so I guess the brief introduction, I've been in software for 20 years. More recently in that journey had a product that company that we built called GreenSense, and that company was acquired by a listed company called ERM Power. On the back of that, I got involved in setting up a private equity group called Go Capital. We invested exclusively back into technology companies, so it was private investment. Private equity, what's good hearing you talk is that our investments have included Health Engine and Isotana in that quarter, so we led a couple of those rounds, which is really good. I led Innovation Bay for 3.5 years in Perth. Most recently, I'm helping the RAC with their venture fund, which is called Better Labs. And I guess in terms of this conversation, over that period, the last 3 years, those things I've been involved in has equated to $23 million of funding in WA. So I think that's a pretty good contribution.
Good evening, everyone. My name is Bonnie Lynn, and 20 years ago I started in Silicon Valley working for the first high-tech PR firm that represented startups like Facebook and Salesforce.com. And we turned down Google as a client because Yahoo seemed better. and the end. Over the last 20 years, I've spent 10 years in China doing lean manufacturing, cross-border M&A, 4.5 years running R&D grants and manufacturing innovation in the Pacific Northwest, and moved to Australia about 4.5 years ago. Work as an independent advisor to family offices, corporates, and governments in Asia and Australia. Here locally, I've worked with Minbury Foundation, most recently BHP, Western Power, and I've worked in the past with Singapore and Taiwan companies. And thanks for having me here tonight.
Thanks, Bonnie. Yeah, my name is Rob Nathan. I founded one of Perth's first Startup Accelerator programs here at SpaceCube. It was Amcom Upstart in the first year, and then Vocus Upstart in the second year. That was in 2016. Thanks, Peter. And since then, I've continued to invest in startup tech companies. I've invested in over 20 companies so far, and continue to try and support where I can startups and the startup ecosystem in Perth. And that's why I'm here.
Hi everybody, my name's David Weir. I'm the CEO of a company called Radiant Capital. We help companies receive advances on their R&D tax. So we work with a lot of early stage tech startups, a lot of innovative companies. Over the last 2 years, proudly based here in Perth, I should say as well. Over the last 2 years, we've put a bit over $80 million worth of work into tech startups. And about 40 million of that is actually based here in Western Australia, so we've had pretty good success here. I guess, tonight we work with a lot of companies that are seeking funding, either when they're working with us or as a pathway through. Once they finish with our style of capital, we transition them on to other funds. So very excited to be here this evening.
My name is Gary Macbeth. I'm managing partner with 808 Ventures, which is an early stage technology investment company. I hail from Scotland originally, spent about 16 years in Silicon Valley. I was a coder by trade, ended up in Perth, just as you do. So we're a fairly new fund, and hopefully working towards addressing the question of how you get a $100 million fund up. We'd like to be part of that equation. You don't need to be the whole one, which I think we'll discuss tonight. And we probably have a few companies that we have invested in that you should know about that are companies like. We're global in remit. The 808 is -8, 0 and +8 on the time zones. I have a partner in Silicon Valley, and it was really me just trying to make sense of my life, seeing as I've lived on all 3 continents. I may as well have a venture capital company that does the same. So we do make global investments, and we have made 3 at WA, so maybe not the ordinary you're talking about, but it's a start.
Hi, I'm Tracy Clark. My background is in accounting, financial services and investment. I am on the committee for Perth Angels and a member of Scout Investors in Melbourne. Probably my first foray into startups was about 25 years ago when I invested in a housemate's project that he was starting, and it didn't always run well, but it ended up being, we listed it, and it's now still a successful listed company, so that was a good start. So I've been investing in that sector since then, and probably have about 11 in my portfolio at the moment. Yeah, that's it.
Hi everyone, my name is Jasmine Ward. I've been involved in a couple of startups, everything from health and safety software to genetic testing. I was also in corporate venture capital with Navitas Ventures, and now most recently I'm teaching university students, getting them into entrepreneurship with the UWA Business School and with Bloom as well.
Thank you all. That's a wonderful intro. I think we're very lucky to have you, and it's also breadth. We haven't got 8 people from the same space, which is awesome. So really looking forward to the conversation. Just for closing it, me, Steve Carroll. So RSM is a multidisciplinary accounting firm. We're a national practice with international relationship to the rest of the partnerships. What I do is the R&D tax, so I work closely with David here. What RSM does is absolutely our hard stuff. So I do the fun stuff, you get the cash back through me, or the rest of the RSM crew look after whether you're a startup or you're a listing company, we have someone to help them out. But I'm here for the fun. And that's what you're all here to entertain me tonight. I'm looking forward to this conversation. It's a conversation that happens around tables, over coffees. It is occasionally pops up as a panel discussion, so really looking forward to deep diving onto it today. So when Pete suggested it was like a no-brainer. I've got pages of questions for you all to try to control us. We've got about an hour, and then we'll have that little break, and then we'll break. So audience, we really do want your participation, but please, if you can, maybe make a note of the questions you might have, and then we'll bring them in at the end. Otherwise, we will get distracted. So please keep those questions ready to roll after we come back from the break, and you'll get full access to the panel. So how are we going to hold this? What am I planning? Pete sent around us all of a list. I read that, and that's really cool. Straight away, I've got a whole bunch of new questions. So if you're prepared, not all of them, no, they were good questions. So what are we going to do? I would like to start with a bit of a foundation set. Then I want to cover a little bit of the why, how, and what. So who knows at least the why, how, and what? Come on, someone. Why, how, and what? Come on, somebody. Someone's an egg. Anyway, so we're looking a little bit deep dive on why we want it, how we're going to do it, and what it's going to look like. If we can get to the end of the conversation and have a little bit of a blueprint, if we can get through those issues, we may have a what we have to do. Now that's a big, hairy, audacious goal perhaps, but what is it going to take? First of all, let's show of hands. Who wants a $100 million fund? Yeah, there you go. All right, so we don't have to go. We can finish it. Yeah, no. So everyone wants, of course. First of all, I want to throw it around. What does a VC look like? Let's make sure we're all on the same page. What does a VC look like? Now, there are lots of different styles. So I just wanted to throw around for everybody, first of all, to go through what they think a VC looks like. Let's just start there. What is a VC? And then we can sort of go a bit further. Who wants to kick us off? Right, I'll have a crack at the start, and maybe pass the microphone on. But venture capital I would define as being professionally managed investment capital. So it's not random, it's not angel investors, it's not sort of random capital that comes from corporations. It's professionally managed investment in generally technology-related companies, and it can be from various stages, from very seed, early stage, amounts of $500,000 into late stage up to $10, $20 million. So I think professionally managed by a professional manager is probably what differentiates venture capital from perhaps other forms of investment capital. Anyone else want to add? Yep, Derek, if you're around.
I think it's pooled money, looking for high returns and greedy returns.
Really? Okay. Any other expression words around what do you think of VC when you think of VC? Gary, you're one.
Generally agree with the comments there by the two gents, so I don't need to embellish on that. But greedy terms, I think it depends who you talk to. I think the world of VC is changing, and the terms that VCs operate around are shifting to just reflect the way the world is today. And I think that's for the better, and not everybody's trying to do that, but I think it depends who you talk to. So.
And maybe I'll just clarify that, because I guess before I don't get any more questions asked of me on that one. I mean, obviously the traditional VC model does, at the end of the day, it's a financial investment for those people. So, and they're usually smart people and they're very commercial, so they are looking for good returns, and they're usually very astute, maybe more so than the people they're investing in some respects for the return model. Maybe the thing that I've just mentioned is from a Better Labs perspective, in this conversation, I'm representing corporate venture, like Nathan Avitas, and that is actually very different. We're not looking for greedy terms. It's very much around backing the founder, trying to come up with founder-friendly terms. I think corporate venture, often the drive is a little bit different, because it's sometimes about support, or it's about exposure to innovation in the industry. It's not always greedy, you're right.
I think the key thing, it has to be pragmatic. The pooled investment comes from people who are looking to make money. They're happy to take a bit of a punt on a higher risk asset class than sticking the money in the bank, but they're looking to make money. One of the things in my short experience as a venture capital manager is the delta in the understanding between the first-time entrepreneur, perhaps, maybe, and the investment community. That sometimes is a painful process, where the entrepreneurs might see that it's being greedy, but actually there's a bit of wisdom. And there's decades before I into this game that kind of brought it to this stage. And you need to be pragmatic, because the people putting the money in are taking the risk, and they do want to make money, but certainly the people that are behind us are genuinely good people, and they want the companies to succeed, because if they succeed, they win. And so professional investors are really in charge of that process on behalf of the pooled investment, but they do want win. They want the companies to be happy, they want the companies to be successful, and they want all the staff within those companies to be successful. So for me, that's the definition of a good VC. Right.
And having worked with venture capitalists from the largest, like Andreessen Horowitz and Sequoia, down to this new crop of micro VCs that are coming about, I would say that I take a more holistic view. Actually, venture capital is the original form of impact investment. It has two parts to it. It's pay it forward and pay it back. So yes, it is pooled capital, and they are after a return, but it is also about paying it forward, because once the expectation, at least in the old Silicon Valley days, before a reality TV show was made about it, it was about the entrepreneurs making their big exit and then going back to mentoring and reinvesting back in the ecosystem to the new crop of entrepreneurs and passing on that knowledge. So maybe that's a naive view, but it's the view I'm sticking to.
Anybody? So what's WA's experience been with VCs, either here or coming through and investing? Who's got some comments about the history of VC in WA? Well, there isn't a lot of venture capital in WA. I had a look through today, just for
refresh my memory, and there's 69 venture capital limited partnerships listed on the federal government website, of which 2 are from WA, of which only one I've never seen them actually active, so only one of those 69 venture capital limited partnerships is active in WA, and that was UA Capital. And UA is Matt McFarlane, who does a tremendous job supporting the startup ecosystem. They're about 8 years through their 11-year life, so their fund was raised 8 years ago. So 10 years ago. 10 years ago. So in terms of venture capital raised by traditional venture capital limited partnerships in Western Australia, it was like that was 10 years ago. So there's been very little venture capital raised in the traditional sense of venture capital. In terms of pooled funds investing in tech companies, there has been very, very little in Western Australia.
Sorry, I was going to say, what about funds that have invested? So what about the funds not here that have invested here? Have there been a lot? Anybody got any comments about that? So either ones that are here historically, currently, or ones that have also invested into WA. Any comments?
Well, historically, there's also Stonebridge Ventures, which I think they started in about 2000, and so they would have had their first fund closed in about 2010.
Yeah.
And they had another one start after that, which is closed several years ago as well. And there was historically some VC funds, Foundation Capital, I think First Capital. This is back in the 90s, and I don't know much about them. But in terms of the time that we've been monitoring what's happening, Australia's got more VC funds of investable capital than it's ever had before. We're talking, it's heading up towards, I think, 2 to 3 billion. There was just another fund announced by Square Peg, which was 340 mil. And I'm not aware of one single investment by those big funds. Sorry, not aware of one single investment by any of those big VCs in Western Australia. So this is air trade. Sorry? I've missed that one, haven't I? Okay.
So Main Sequence is a venture capital firm associated with CSIRO, and each of the 4 general partners have a relationship with the major universities in each states. And Phil Morrow is originally from WA, and he comes here every month to UWA to mentor the students at UW's Jasmine at Bloom and some of the PhD and postgrad researchers around entrepreneurship and venture capital. And I know he's looked at a couple.
Have they made any investments?
That's a good question, and I'm terrible for names.
And it's very R&D focused as well.
So Health Engine, did that? Yeah.
Yeah, just a couple of quick comments on the history. Keep in mind the funds that these guys mentioned, Stonebridge and UR, was a matched funding program from the federal government, 20 million, or I think one of them was 20 million. There's a guy in the room, by the way, that can talk better about this. I keep looking at him to try and get a comment from Andrew Hall. So he was involved with Stonebridge Ventures and running a great Perth startup called Formalytics, which is cool. But yeah, I guess just keep in mind it was actually federal government match funding that kind of stimulated that, which is kind of probably important because that's not there at the moment in that same capacity. And in terms of VCs in Perth, so Health Engine, one of the rounds that we participated in, what's interesting story about this is that Health Engine were, let's try and just check how much of this is public, but anyway, I'll this is why I haven't drunk a beer yet. But I think what I could say is that the money Health Engine was trying to raise was raised locally. And through that process, Sequoia Capital got interested and decided they wanted to participate, but their minimum check size is $15 million. So effectively Health Engine had raised about $10 million at the time. We were involved actually in leading that round. But for Sequoia to invest, it's like that's our entry point level. So that created a $25 million round. And my understanding is that it was Sequoia Capital's first investment in Australia.
And did they also have the Telstra corporate investment?
Health Engine,
Yeah, which
right.
is again corporate VC.
Yeah, that's right.
Yeah. Anybody else got any thoughts about history, WA investment VC style?
I mean, on that note, I guess what's interesting is the +8 program, which I know is the accelerated level, but that's a Telstra investment, so that's East Coast as well. Yeah.
No, 100%. Anybody else remember the bad old days, good old days, money coming through? No. So our setting of our foundations is pretty simple. There hasn't been a lot. So there's a pretty low level of foundation we have to worry about. But let's talk a little bit about why. So before we dive into how, why would we have a large VC fund? I call 100 million, like you said, they just raised 320 or $440 million for one fund in Sydney. We'll say 100's large. Why would a VC living and breathing in Perth be good? And let's just think about the economy first of all. From an economic, giving back, social impact, all those sorts of things. What does having a VC mean to Perth? Anybody want to throw that around?
From what I've seen, we've got a heck of a lot of innovation and some great ideas in Perth. And, but we don't have a very deep investor pool when it comes to supporting those innovations. And particularly from Perth Angels, we can, not everyone in the room is always, they're all looking for investments, but not everyone's, focused on fintech or ag tech. And, so, maybe 50 investors, there might be maybe 10 that might be interested in that certain sector. So we actually have quite a light pool. It'd just be great to be able to, for Perth Angels to be able to raise, a couple of $100,000 and then to be supported by a fund that would co-invest with us. Even also some of the great things that are happening in ag tech, that quite often needs a lot of capital, and so some of those projects just don't even get off the ground because we're just not sure where the funds are going to go. And there also seems to be quite a gap between, one of the companies that we're dealing with at the moment needs to raise 10 million. But you go to the VCs overseas and a lot of them, like you said, won't invest, less than 15 mil. So you're kind of caught in that gap. I think a fund would be helpful in that regard.
So just following on the angel investment piece, is one of the challenges to getting angel investment the absence of follow-on investment in Western Australia? So an angel's less likely to put money into something that they think might be really good if they're less confident about that company's ability to raise the next round.
I don't feel that that's something that puts us off because what we do is we raise funds, and then if we need follow-on rounds, we quite often then reach out to the angel groups across Australia. We also do have some quite good networks into some family offices and other groups and private investors, so we're always just trying to expand on the amount of private investors that we have around the country even to have that follow-on support. But it is always an issue because you're really scratching around, it doesn't come easy.
I think what happens in Perth that's a little bit unique is that maybe companies can raise seed capital, like through the Perth Angels, and then it comes to the next funding round where they need more money, like maybe somewhere in the region of like $1 million to $5 million for the next stage of growth, and there's no one here to support them. So what happens is it forces these companies, not necessarily forces them, but most of them then go down a path of trying to raise money through public markets. And there's one in particular at the moment that I'm thinking of that I invested in through the Perth Angels that's now going through an IPO process, because that really is the only way that they can see about raising, let's say, $1 to $5 million, and that forces them to list too early. And unfortunately, the stock market is just a graveyard of technology companies that really listed far too early. And really what we need is some funding that supports companies between that first round, coming through angel investors and other investors, and supports them through to a point where they are ready to IPO in the market. And unfortunately, what happens in Perth is, we know how to raise money on stock markets, that's what we're good at, and I think the end result is we force potentially good technology companies into a public market where, unfortunately, they typically fail due to, and there's no way out. Once you're on a public market, it's very difficult to then turn around and raise venture capital or look at other means of capital raising. You wind up in a death spiral of discounted capital raisings, and the founder winds up owning less than 2% of the company and gets kicked out and replaced.
Yeah, so in our business, we have some 49 companies that we currently have loans outstanding to at the moment. And in many of those cases where the first protocol, or potentially even the first sort of corporate person that's ever put money into the business, short of friends and family. So we get a lot of calls asking where to next. And painful to say, majority of those referrals end up going over east. Building on the conversation from earlier, one thing I have learned with these referrals is that no one VC firm looks the same. So you've really got to match that business to where it's going. But one of the biggest advantages I would say with having the firm here is that Perth is a very small place. And being able to have that close introduction from one Perth business, and I've said it before, so again, we're a very proud Perth business, to be able to refer that on, I think would say a lot. Though now I know Gary, so phone might ring.
Just while the mic's coming down, I'll just jump in, because I kind of have a bit of a different view. And when I sold Green Sense, I've been in this space, say, for about 4 years, and it's just, you hear over and over again, there's no money in Perth, and I just don't share that view. There is loads of money in Perth. I don't know if it's still correct, but I think at one point, weren't we the city with the highest millionaires per capita or something? There's loads of money, and the problem is that money is, a bit like Rob was saying, that money is just used to investing in a guy on a full drive, driving around the Pilbara looking for some mineral, and they'll put $5 million to take a punt to see if you can find it. And so we have, my view is we have high risk appetite and we have the money, we're just kind of used to that public environment. And now to give an example, when we do our round, say in Health Engine or Asitana, companies people know, we put some of our own money in, but we then go and bring other investors. And the Health Engine raise we did was in 4 weeks. We then did a follow-on round that took 2 weeks. Asitana took 4 weeks. Like, it's really quick, and it's not that the money's not there, it's there. So I guess coming to your question around one of the reasons why we might need a VC is, I think it's just a few factors. There's a disconnect between the entrepreneurs and their ability to know who the investors are. So a VC actually gives a coordination point for that. It gives a place to go. So that would kind of help. I think the other part is it's the education for investors, because, as I was saying, we've got the risk, we've got the money. It's just they don't understand what it means to invest in say, tech. But I think there's this really interesting parallel to the mining journey, perhaps, that people are familiar with, which is exploration. So maybe that's kind of MVP kind of stuff, and whatever you can parallel those journeys. I think it's some of us need to think about how we educate investors and what that looks like. So.
I agree with you all. I completely agree about the counterpoints or the data points that you have and the follow-on. I remember when our startup was raising money, and it was post-Muru-D. So, once you've kind of burnt through Muru-D money, then where do you go? And unfortunately, the culture is don't stay in Perth. If you want this to survive, you need to go over east, or you need to go to the States. And unfortunately, my experience with raising money in Perth is, when are you going to IPO? Versus in Sydney or Melbourne, it's this isn't particularly what we're looking for, but let me introduce you to X, Y, and Z, similar to London. So maybe there is that education with the investors, but I would like to see a follow-on fund or a $100 million fund, so you can follow on from those accelerators.
I share Derek's view that there's plenty of capital here. That's one of the assets that we actually do have. There's just very low cross-sector collaboration. There's a lack of education around understanding how to connect the dots better. I was a former angel investor with Keiretsu Forum, which is the world's largest global investor network with 500 angels, and they spent a lot of time educating the angels and shadowing each other on the deals as a way of education. And so I don't necessarily think the answer is of one VC fund. It could be 3 super angel groups, but well-educated, very niche focused, and that would present a lower risk. The problem is this country is used to private equity, which is 100% control, and understanding VC, which is minority equity, very little control, long horizons, without a very clear exit path because of it being a small market, it presents a very high risk to traditional investors. And so I don't necessarily think that one VC or follow-on fund is the answer. It could be just more at the earlier stage with angels and super angel groups.
I certainly agree with what you've said about sort of that fragmentation of investors and how startups really have to go looking for the right people, and it does take a while. But also on the education piece, I think Greg Reedy through Perth Angels has been doing some fantastic masterclasses just trying to educate investors on different sectors, you know, whether it's, you know, medtech, agriculture, you know, just, yeah, so that education piece is really valuable just to take people's minds away from, you know, listed stocks to, you know, what potential there is out there. So it's good.
I'll just echo a couple of points. I think the cross-pollination is a good thing. I think it probably is better that it's more than one fund because you get the diversity of the input from the various parties that would be included in that, and you might get different experiences and industry experience and such. Just within the ecosystem, everybody's busy, but I think it's important that everybody tries to take time to collaborate. Like, yeah, I've had some reach out with the Perth Angels to try to get a bit of kind of cross investment or co-investment, and I think we just need to keep kind of doing it. It doesn't always happen first time because, you know, people get busy and go on holiday or something like that, but it's just, it is a nascent market. It's nascent from even the last time we spoke about the spirit of entrepreneurship in Perth is still pretty nascent coming up. There's some naivety on both sides of the equation here, and I can tell you a lot of my sleepless nights are because I am working pretty hard to try and educate some of the investors on this asset class is hard work, and it is a bit of a punt, but they're up for that, and they've proven they're up for it because they will drive around the utes and do all that kind of stuff, and so they're familiar to it. So it's just getting them into a new asset class, and that is the biggest challenge for me that I've found in talking to investors. It takes time takes many conversations over, it's not just days or weeks or months. Once they're in and they're on board, then great, but I've definitely found that even very high net worth individuals, this is a kind of scary class for them. It's very unknown, and it just takes them a little bit of time. So maybe what we're in the middle of here is hopefully the calm before the storm, because I can feel it happening. It's just a question of just keep chipping away.
It's kind of like digging holes in the ground, right?
Like the coal. Just one little comment on that as well, just to add, is that I don't think we should also miss the entrepreneur side of that equation being you've got to work hard to get money, and if my view is if you're the right team and the right product and the right market, the money will always be there, and it's kind of easy to say there's no money in Perth and go, I can't get funding, there's no money in Perth, and I just don't like that statement because my experience is that's not true, and you know, probably around the table, as good as anyone, I've seen more pictures, probably Rob maybe seen quite a few, but over the last couple of years, probably Tracy. It's in the vicinity of 500 or 600 Perth companies, and of that group, either personally or through any of the vehicles I've been involved in, I've invested in 6 or 7 companies, and that is the ratio of good companies, and most of the time it's because the entrepreneur doesn't know what they're talking about, they don't have the right products, they haven't got the right experience, they haven't thought about the investment terms. They have, like, there's a whole stack of stuff. It's not about not the intent to invest, and you know, the Better Labs Fund is a pretty good example where we launched in September, and we talk about this in information sessions, so I can share with you. We've had about 100 applications. We're just making our 3rd investment at the moment, and the reason is because the other 97 were crap. Like honestly, like if they're good, we've literally got money to write. So when someone says, like, it's money in the bank. So when someone says there's no money in Perth, I'm like, that's not true. Here's the checkbook right here. So it's, I guess I'm trying to say, we can't listen to just like lump this whole conversation on investor education as well. I think there's been, by the way, great work on entrepreneur education, and it's happening, and you know, I think people in the room probably know about those groups, but there is that side of the equation as well. So.
Yeah, just taking the entrepreneur side of the equation, not disputing any of that. But in terms, I think, going back to the conversation I was having with Jasmine at the beginning, if you're starting out or looking at starting out on this journey, the visibility of potential capital is an important factor to you deciding to make that, start that journey. If you see, if a kid's wanting to, or a young person's wanting to start a company, or even people in their 30s is often the case, they may look at what's happening over east and see that there's all these VCs, all these investments being made, and see our data as well. They look at what's happening in the US and they go, oh, can I do that here? And can they, if they, are they going to think they can if they can't see it happening?
So let's throw a question, maybe Jasmine help us a little bit as well. Is there an inspiration factor that if you like, a flagship fund would help with coming up to balloon stage or angel? So, like you said, Tracy, it's not stopping you potentially, but is there, by having a flag that say, well, people that come along don't get 200 grand, they get 5 million if they've gone through these hurdles, will, like Peter's suggesting, would that change that inspiration? Will that drive people to actually have a crack rather than go and work for a mining company?
Absolutely. I 100% agree with you. Unfortunately, I'm trying to advocate for entrepreneurship with the students, but I guess the frustrating thing or the annoying thing is that they can't see a pipeline of funding, or they can't see a pipeline of, will this really work? They don't have a lot of success stories to look to. And so, it still really is that they would go to a consulting firm or an engineering firm or a mining company. We're trying to change that, but I do think a $100 million fund, in any way that it's invested, it would work. Because not only would you see pipeline, I think it would do brilliant things for the ecosystem. And you're starting to see this in Brisbane. They had the Advanced Queensland Fund in 2015, that was 180 million. And now, I think in 2019, it's now up to 750. And now Brisbane has just overtaken Melbourne in its ecosystem, and they're, to the point where Cyro, on the Accelerator, held their demo day in Brisbane as opposed to Sydney. And you can see the great things that it's doing for Brisbane. And so I think this is a great investment to jobs and growth and students and, everything. It's a no-brainer to me. But someone disagree, please.
So on jobs and growth, I took on the economic development job in 2009 when our country in the US lost 8 million jobs over a 2-year period, and people were starting startups because they couldn't find jobs. And so the government was stepping in to try to provide that risk capital and a series of support. The issue was there was over 40 service providers that could help startups, and what we ended up doing was getting a public-private partnership together to actually put together a roadmap so that if they knew they were in ag tech or they knew what resources for capital talent they could go to. And then on the entrepreneurial part, absolutely. Portland was 3 hours south of Seattle, and they would whine that they would have no capital. Well, drive up to Seattle, get on a plane, 1 hour flight to San Francisco, and venture capital at the end of the day, angel or all its form of investment capital is about leverage and leveraging others' expertise, talent, experience, and capital. And if it's not in our backyard, you have to bring that back in, and success begets success. So, and that's how the ecosystem builds. But infrastructure-wise, we're quite immature because we haven't spent that time investing in cross-pollination. And if we're looking for the government to anchor that, the best they can do is de-risk it, but they're not going to do it. So that's...
Just like to add one thing to your comment about inspiration. It's not just inspiration, it's also persisting, and entrepreneurship is about persisting, and it takes a long time. It's a really hard personal journey for most people. I think with a $100 million fund, you maybe see more entrepreneurs persisting, hopefully pivoting and finding the right solution rather than going it's all too hard and quitting and going back to their day jobs. So I think encouraging persistence is pretty important as well.
Yeah, I think the fund, having a fund there would be encouraging, but it's also really about entrepreneurs seeing success stories, and I think we need to see more of those success stories that are actually surviving and thriving in Perth. that would, because not every idea should be invested in, as you've noted. So the fund's not necessarily going to help everyone, but at least if it can support, the best of what we've got and really drive that ecosystem, I think it would be encouraging.
So one of those things, and it comes back to your very first point, Rob, and along that lines, I think Bonnie just mentioned it there, reminded me, the VCs are professionally run. Now, a large fund has teams of people that take care of a lot of this, promote success, support, coordinate, those sorts of things. So bringing either new superstars into Perth to run it, to manage, to help with it, people that have done it in other places, and or bringing people in Perth together to basically get it done. Do we have any comments that if you had the money in the fund, not only are you giving money, but you are providing a vehicle for others to come into, professionals to run it, or people in Perth also to scale? Any comments around that? But do you think it'd help if the fund brought in more people?
Absolutely. So I did a study for Minderoo Foundation recently on looking at different types of impact investment models around technology and innovation. And everybody always focuses on a fund because that's the easiest vehicle. But the two other aspects I pointed out that were equally important ingredients was a public-private partnership that brings the ecosystem together and does the things like promotion and kind of greases the wheels and does the information gathering and the spitting back out of information that's to the relevant parties. But a talent bank. You need the right incentive structure that attracts and remunerates people on cash equity or carry or whatever. If they're motivated by philanthropy and the goodness of their heart, that's a strong motivator as well. A structured vehicle with which to attract and process that type of talent, and that can be local talent as well as global talent. There's amazing people coming to Perth who've moved to Perth, who come to Perth, but also who call Perth home. And it just, they're hidden, is my...
That's cool. What we might, and this will continue the conversation so you can squeeze it in, so I'm not cutting you off, sorry. So let's move into how they run and potentially then start talking about how would a Perth large VC look, or multiples, that's sort of thrown around there. Let's talk about, first of all, and you 100% nailed it, we all know there's money in Perth, whether it's in corporates or in high wealth individuals or high quality private businesses that make a lot of money and do very well. How do you get money into a VC? How does that happen?
I mean, Karen's probably better to answer that in some ways, but but I guess just leading into that, what I was going to mention is that when we set up Go Capital, our intention was to put a fund together. And we started with, really quickly, we got $3 or $4 million together. We made our first round investment into Health Engine with that, and we thought, great, that's good, let's take that as a story to go and put the fund together. And what I found was interesting, and that, to come to your question, that's going to, we went to family offices, we went to high net worths. My business partner had a long track record in funds management, working with the superannuation fund, so we had a few conversations there. So a kind of mix of sources. What was interesting for us, and this was mostly Perth focused, is that most of the interest came from high net worths and family offices, and I'm sort of mid-sized, smaller family offices here. So they can write check sizes of $1, $2 million. The high net worths that we were talking to, again, probably $500,000 million type checks. What was really interesting is when we pitched the idea of a fund to them, the response we got was, actually, this is my fund money. I don't want to just hand it to you and let you make the investment decision. I kind of want to be involved in the deal, and I want to understand it, and I want to see why you're making that decision, and I want to learn. And so we ended up, the reason Go Capital never did a fund was that we created a private equity structure, which effectively says we're going to invest in a deal, we've looked at 100, this is the one we're going to invest in. We go out to that same group of people that might have been in the fund and say, do you want to participate in this on a one-on-one, case-by-case kind of basis. And as Ella pointed out, we found we could raise money really quickly every time we needed to do that. But one of the things two things that were really interesting, when we tried to raise the fund, the other parts of feedback we got, one was they would look at my business partner and then go, individually you guys have done some really great things, but together there's no track record. And so what we want to do is back you. We like what we're trying to do. We'll back you into a few deals, and then let's kind of wait till we get some outcome from that, or see some capital returned, and then we can talk about the fund. So the track record aspect's really important. So that question of do we need to bring in expertise, maybe, because even, I don't know about Stonebridge, but UR Capital, at $40 million, they only invested in 3 or 4 actual technology companies. The rest was biotech, and they haven't had an exit. And, you know, I'm sitting here saying we've invested this $23 million, we haven't had an exit. So I've got a good track record of spending the money, not actually about making the money, right? The other thing that was really interesting, just a little side note before I hand on, is that part of what we were trying to pitch is like, we need to get to $10 million because then we're going to get this structure of early stage venture capital, blah, 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 limited partnership that gives you the tax deduction. And all the investors said, oh, I don't care, like if we give you this money, we're expecting it not to come back. So if you bring money back, we'll take care of the tax, so don't worry about it. So just kind of interesting dialogue on that question of how you raise the money. I mean, I'm happy to share in a minute how we structure our funds if it's helpful, but maybe I'll keep talking soon.
Yeah, I could probably comment, probably should. I can echo a lot of the same experiences. 2 types of fund to get started. If your name's Bill Gates, you say I'm starting a fund, you don't have any problems getting investors, right? If you're Gary Macbeth or Derek, you know, you're starting your first time fund manager, right? You either do it by, you know, I got a little bit lucky. I met family offices who were interested in investing in tech. They were curious about it, but didn't know how to do it. So we started that education process. I sent them to a Perth Angel event, and they're like, no, that's too hard, you know, too hard work. You don't want to get involved in that kind of stuff. But we did get some who said we would quite like to be. We like this idea of being a little bit more involved. We don't want to be entirely passive. It's some fun money. So we ended up structuring it not as a traditional closed fund for a couple of reasons. One, it's Perth, and I'm a first-time fund manager, so my optimism around raising a chunk of money in a period of time and closing that out were about zero, for all the reasons we've talked about. So we came up with a structure that was just a bit more evergreen in nature, where we could take investors in over time. Second to that, we listened to what they were saying in terms of some wanted to be just entirely passive. Others liked the idea of having coffees and meetings and talking about stuff, and maybe come to the odd pitch and stuff like that. So we came up with the notion, and I'm still not entirely sure it's a great idea, but we came up with the notion of, okay, it's a fund, it's pooled money, we're going to do all the heavy lifting, we're going to do all the work, and we're going to bring it up to a point where those that are interested can either come to a pitch, they can participate on a call if they want, or we'll even give you the option if you want. This is the bit we kind of question. You can opt out of a particular deal if you don't like it. The default is everybody's in, and everybody's in pro rata standard stuff, but you can opt out. So we were trying to accommodate Perth's fear of this asset class, and I'm not sure that was a great idea, and we might change it. You know, but everything that you said about the education of the investors, it is a bit of fund money. Maybe it's the extreme high right of the risk profile, right? So they're not necessarily expecting it to come back. But if it does come back, they'd like to see it come back good. But to a man, they all care about job creation. They are all highly philanthropic outside of anything they do with us. And these are real people with families, different problems from what you and I might experience, but they are human beings at the end of the day. And I think this journey is just time. There isn't enough exits really that people can hold it up. You know, you talk about the canvas, the Atlassian, it's great, blah, but there isn't enough because it takes time. It takes time to invest the money, it takes time to create the companies, and it takes time to exit the companies. So I kind of went off tangent now, but really, yeah.
And working with Asian family offices and advising them to become a limited partner in funds and other types of investments, you're always going to run into the situation where they want control, especially if it's something new and exciting. And so traditional early stage ecosystems are actually the VC, if you look back 50 to 60 years in the US, they're all anchored by government as well as institutional funding, like university endowments, hedge funds that have a very long-term horizon, pension funds. Those are what anchor, and everyone forgets Harvard and Yale's top performing funds with venture capital. And that's it's a stat that always gets lost when we talk about venture capital, but it is that initial de-risking. Otherwise, if you're dealing with a culture who likes a lot of control with high net worths and family offices, fund structure is going to be too restrictive, and super angel type of group of PE type of structures will be a lot better.
Should I add quickly that after they get to know you and after they see the investments, they all just shut up and said, keep going, do what you're doing. So it's that fear in the beginning, but eventually they're like, okay, crack on.
Let's come back to Derek's point. The only way you can raise a 100 mil venture capital fund is having a track record. And unfortunately, there's very few people with a significant track record to do that. Probably the only person I can think of is Rob Newman. So someone needs to go and convince Rob Newman to quit Nearmap and come back to Western Australia and help us start a 100 mil venture capital fund. Well, Michael Malone, although he doesn't have a track record necessarily in VC, but he's moved back. Get him involved as well.
Yeah, I was also going to echo the track record comment as well. I mean, our business is probably one of the case in point. We worked for 2 years with a large US hedge fund, had to convince them not only of our business but of the asset class as well before they actually came around, bought in 50% of the company and actually gave us a $100 million debt facility to fuel our loan book. So, that was 2 years to be an overnight success and actually bolting the funding we needed to properly scale our business. So track record is really key to it.
Yeah, and I think just a couple of quick points on the question of what would it take or how do you set up the fund. You need to realise that when you're talking to the people that have the money that could put the size we're talking about, whether it's $10 million funds or $100 million fund or whatever, these people get offered every possible investment opportunity in the world. And so venture capital is the highest risk profile asset class they could invest in. And so you've got to talk about a return of a minimum 10 times, if not 100 times. So it's all well and good saying we need $100 million of venture capital, but I think we also need to think about that possibly as a $10 billion return on that investment. And do we, we've got to, do we have the ability to run that type of company in that size, or that number of companies to bring the $10 billion back? And even with Better Labs, it's a toe in the water by the RAC. The pitch is still a 10 times return. So we're still looking to bring, $30-40 million back from that investment. So, and it's interesting on the entrepreneur education side of that, because the amount of times entrepreneurs come and say, I want $500,000 or $300,000, and my company's valued at $5 million, 9.5 times out of 10, they never present how that $5 million valuation is going to become $50 million valuation. And so the education of how do you raise capital at the entrepreneur level is so important to kind of think about the return. Often when I do these presentations, my last slide is a boomerang, and it's like, if you give your money, you want the money to come back. Like, it's got to be a return kind of thing. The other just kind of aspects to think about is it actually costs a lot to run a fund. So for Go Capital, like we've got it's probably $15-16 million of funds under management. It's not economical to do that at the moment. We have to actually, apart from paying the partners, we don't include our management fees, so we're kind of just bearing the cost of that in the hope that we get a return. We have our financial services license, and that's $100,000 just to have that. To have your financial services license, we have to have a net asset base of a certain amount. We've got to have a cash base of a certain amount. And so all these things are, like forgetting management fee and all the rest of it, there's a high cost to run the fund. So there's a lot more thinking that, hey, we just need a $100 million fund. It's the return, it's the management structure, it's the fee structure, it's the whole stack of stuff to think about. So, which we can do, by the way. All these things are very, very achievable, but just don't want us to be too naive on, hey, let's get the fund going, come on.
But Peter did share that I was advising BHP on their corporate venturing, and I'm not able to talk very much about it today, but an idea that we can explore today is getting 10 corporates and their corporate giving arm, which is traditionally allocated to philanthropy, and allocating a portion of that and pooling those funds.
Great idea.
Did everyone hear me?
Yeah.
Did everyone hear me?
Putting corporate.
So it just not to hold down and kind of get
Where's the money coming
towards
from?
an answer.
Well,
but anchored with institutional, get some of the corporates involved, but it's about matching to the right investment profile and investor risk profile. And if we're after returns, corporates won't go in. But if you take a social value type of angle, you might be able to do something if it's a partnership.
So it's a two-sided market, a VC. What are we getting at? You're trying to sell to the investor to trust me, I'll look after your money, and you're also trying to win the work from the good entrepreneurs to get them in. So we talk to the entrepreneurs about that. is which one do you target first? Do we talk to the investors and then get them on board, or you say, oh no, we don't do that until we've got the good entrepreneurs ready to invest in? Is there a difference? I want to touch on one little thing you raised. The VC fund, theoretical VC fund we're effectively talking about is up the pipeline, not at the Better Labs angel stage. It's at the exit, it's at the Health Engine, Sequoia, Isotana and above, third rounds or whatever they're at to. Do we expect too much? So if we compare what we see with our, now we won't want that. You can talk for as long as you want. If we expect the entrepreneurs, are we comparing apples to apples? What I'm getting at. When you're giving them 500 grand, they're very new, they're very fresh. If you're giving them $5 million, they're at the Better Health Engine Isotana stage. Does that help the conversation if we stepped it up a level and then say we're dealing with the businesses that have progressed the stage? Anybody got a comment about that?
Only that it certainly helps to de-risk the investment, and makes it's probably easier to draw investors into that proposition.
Well, so then, how do we need the list of those businesses that have been the success stories in Perth in the last 3 to 5 years that Techboard has, to then take back to the investor? So no, we're not talking about when they started. We're talking about when they're at spookfish stage, and do they have to exit or do they get another round?
Yeah, I reckon that's a really good point, because a lot of the conversation has probably been at that early stage, which is perhaps more reflective of where the volume of startups in Perth are right now. From a GoCap perspective, we would not invest until a company's got $2 million revenue. That was kind of our entry point. But I think that's also where the Australian market, and particularly the Perth market, is very different to the US market, because I guess we're looking for revenue as a sign of traction. I think in the US, that's not the way to think about it, so it's a very different market. But I guess, our investments in Health Engine Isotana were all predicated on revenue, and they were check sizes of $8 million and $5 million.
So sorry, so if we remove that revenue target, because we always talk about it, but if we just say you need $5 million now, like a Fast Brick when they listed, they were so they were well away from revenue, and a good example of still need lots of money because they want to scale, those sorts of things. So if we sort of say they're getting to that point, except they don't have enough revenue to meet WA metrics, we're talking global metrics of investing at a point when they still need support, but they've proven they've got a team and those sorts of things. Do we think that's a better place?
I think it would be good actually to get the list you talked about of companies in the last 2 to 5 years that have achieved some kind of funding. If they haven't achieved revenue in 2 to 5 years, I think they're probably not going to happen. If they haven't achieved it, unless they're super R&D kind of stuff, which David could speak to. But if we're talking about companies that are trying to get a widget out the door and all that kind of stuff, 2 to 3 years they should have some kind of commercial traction, right? But I think it's a good question. What kind of fund or level of funding are we talking about? Where is the need in Perth right now? Is it the early stage stuff, and are we still generally scrambling around that kind of level? Or is there a sufficient mass of companies that have kind of gone through that stage and are looking for the 2 to 5 million? And if we're talking that the latter, even when you talk about collaboration ecosystem, it's even worth those companies reaching out to the likes of Derek and myself, because we can talk to other VC funds and we can then follow in those rounds as well. We can't write the $5 million check, but if we represent WA companies that are looking for money and say, hey, we like these guys, we're in the backyard, we've kind of sat and got to know them, and we can put in something to it. But there's some comfort, even larger VCs, maybe not as because they won't give a crap about something like this, but somebody who's going to write a $3 or $5 million check will take the meeting, and they'll take some comfort that we've done a level of due diligence around that just kind of at least opens up the door. And then we can follow in, and then if we're part of that journey, that then creates that next iteration of the next band that come through. As a VC firm, we need to step up our skill so that we're actually then writing more of those checks, and it goes through the food chain. But it's all connected. And you just have to kind of play that game because you can't really kind of miss it, unless you're lucky, you can't miss those change spots.
So just jumping in there, we've got some pretty big VCs in Australia, small by US standards, but if you look at, say, the Airtrees, Right-Click, Square Peg and Blackbird, they're the big ones. They write small checks.
They do.
Yeah, so some of them start writing checks, and they go into investment rounds of $1 million. They're also getting in deals of over 20, but they're actually their entry point, and these are 200+ million funds. Their entry point is around $1 million for some. Some are closer to 2, but they do get in quite early.
You mentioned that they're not investing in WA firms enough, and what I'm suggesting is a way for them to maybe get more attention. I've spoken to the Airtrees and the Square Pegs and guys up in Singapore. They'll take the call. If any of the younger startups try to get into Airtree by picking up the phone, they probably won't get through. So you just need to leverage the ecosystem. We can call them. I've met them, I've talked to them, they'll take the call. And if we're backing it a little bit, if we're saying we've done some due diligence, they're going to take a look. There's no guarantee, but all you're trying to do is optimize your possibility of getting the meeting, right? And so just leverage the ecosystem, as small as it is, as nascent as having the Perth Angels and Go Capital and 808 around. This is what you have right now, and you need to just use that as much as possible.
And I think I just wanted to add to that is that the companies that have received capital, like the ones you mentioned, like the Health Engine Asatana, they were 10-year-old companies before they got there. I mean, Health Engine was a bit different. It got a really interesting opportunity with Telstra and Seven West early on for the first $10 million check. But when they actually did the Sequoia round we're talking about, the 10 years old, Asatana, we did $8 million last year. That's a 10-year-old company. So I think if you take that perspective and think of the positive aspect of this conversation, to me, watching just even the last 4 years, what's happened in terms of the amount of money, I know your stats were down, but I think there's a few more deals we can bump that up a bit with, get you some more data. But I think the ecosystem's moving and growing, and Perth Angels has got really active the last couple of years and writing. Like if you look at the deals they were doing, and it's got a bit more and a bit more and a bit more, and it's like the $100 million fund will come, but probably what we need is the $10 million fund, the $20 million fund. Like I think there's an evolution, and I think we're actually, like as we'd all like to go faster, we actually are kind of heading in the right direction, which is, and if you are a fund, like right now, Perth's, it's a really small market, but if you want to set up a $20 million fund, I mean, I know with the stuff I'm involved in, I reckon I get to see 90% of the deals in Perth. So we get picking of whatever we want, and so it's kind of interesting from that point of view as an opportunity for someone to think about a market that doesn't have a lot of active investment opportunities like that.
So why can't the investors of Perth that have $1 million to $5 million checks they can write, why would they say no to that? I think you've already touched on it. So, okay, we take it from 100, we're around to 20. You take that argument to the investors, who do we take it to? Do we go to the corporates? But then do they limit? They are only going to invest in mining, or they're only going to invest in RAC-related things, or are they prepared to put money into a fund that goes anywhere? Who puts money in? Where does that $20 million take away the 100? Where does it come from? What do we have to do to convince them to make it, to put it in there?
And on that note, I think we should probably have a quick break.
No, we started late. We've got 5 minutes. Who's got the answer? And if we can't answer it, then what's the point? Where? Who?
We started investing capital.
I had the same experience, I think, the last time we had the Techboard. And we shouldn't be defeatist. This is a long journey. And for me personally, we've reached a certain milestone, but we're a startup. We're a startup venture capital company, right? We're talking to startups. We are a startup. I'm a first-time fund manager. I'm still learning some of this stuff, right? But it's happening, and we will get more investors. We will get more capital. The investors we've got are happy. They've seen the stuff coming through. Now we invest globally, so we're not just looking at WA. But the more they see the successes coming through, the more comfort they'll have to put in more. It will happen, and hopefully there'll be more more like us that will start to kind of come up. But it starts from networks. It just builds on trust. It builds on a little bit of success to just push it down the track. It is happening. It's slowly, but it's happening.
Yeah, I mean, I think it is slowly happening, but I guess just a couple of quick comments on specifically your question, where does money come from? I think corporates definitely have a part to play. It's an interesting investment thesis. I know Bonnie's been doing some work in this area. Obviously, it was interesting when we launched the Better Labs Fund, I got calls from 400 or 500 corporates that are all interested going, oh, maybe we should be doing that. And the money that they need to set aside, like, you know, if there's 5 of them doing $5 million each, which is kind of toeing the water for the size of companies we're talking about. Some of them got $25 million of capital with a little bit of competition. That's kind of interesting, and so it doesn't need much. I think there's Startup WA. I was chatting to Sam beforehand, and there's a paper that's gone to the government, and there's some interesting conversation. They're thinking probably, I reckon, a bit bigger than we might realise in terms of how do they support this, and so all of a sudden you kind of start thinking about matched funding or grant money or co-investment. That's really attractive to an investor. So, you know, I don't think it takes a whole lot. But keep in mind the people that, like the people around the table here that need to set the funds up also need to be really entrepreneurial and think like a startup to get going. Like, you've in some ways got to be more entrepreneurial than the startup to get the fund going, because you're kind of asking for money before you've done anything. And so there's a bit of a challenge there. So if anyone in the room's got appetite on how could I do this, like I literally do not have capacity to do more than what I'm doing, but I reckon I could go and have 4 conversations with corporates right now and get corporate funds running because of what they've seen in the stuff that we've been involved in. So if someone wants to know how to do that and is entrepreneurial and persistent in all the things we're talking about, then really happy to kind of help you figure out how you might do that.
Yeah, so on the question, where do we get the funds? I'm a big fan of the Israel model. Israel is similar to us, you know, young country, except they don't have resources. Very turbulent geopolitical situation. They have no exports. And so the government actually said, what are we going to do? What are we going to export? How are we going to get some money for the country? And so the government invested $100 million into, I think it was 20 VC funds, and they actually created these VC funds. They gave it to, so they created the funds, but it was run by private people. And they realised that because they said, let's give it to the private companies. We can't manage this money. Let's give it to the experts. And so they created these 20 funds. Within 5 years, the funds were able to buy out the government with the return plus interest. And I think that it's the best investment. You know, you're accelerating jobs and growth and the ecosystem. So I think the government has a role to play. I mean, you could do a similar thing with corporates as well. And then I think it was your point, Rob. I think we should also bring back the experts who have left WA. And it's quite a shame that, you know, they're going to the Sydneys and Melbournes and San Franciscos. I love that people are starting to come back here because of the wind and the kite surfing things. But unfortunately, you know, they're saying, I really love the wind, but there's not a lot of industry for me to work in. And so I think, you know, imagine if we started 20 funds with some money from the government or from corporates, we would actually be able to bring those people back and we wouldn't have the brain drain that we've had so far.
So I'll add one more thing following Derek's comment about being entrepreneurial as a venture capital fund. When the guys from Blackbird came to Western Australia, they raised quite a lot of money out of Western Australia. They had a really, really good team. They had some grey hair, they had a really good team and a great product, and they were able to raise money. So I think if we had the right team of people, put that together with a good product offering, I think we would be able to raise a VC fund out of Perth of the scale that we need.
Cool. Any last comments before we take a break? I'll get in trouble. I'll let the panel need a drink. That's why they're getting grumpy. They need a drink. Let's take a 10-minute. Is that what my plan was? It's somewhere. 5 now.
We need at least 10 for everyone.
Yeah, true. There'll be a big queue. So let's fill your glasses up. Grab a stubby. Head back to your seats, and we'll start again. Bring your questions back when you're ready to roll. Thank you. Oh, come on. Oh, look at that. Well done. Yes. Now, we've had value bombs dropping left, right and centre on the panel. It has been a good journey. I've got a nice little list of those value bombs, and we'd love to draw them together. but we did promise that you would have a chance to ask us questions, and I guess we'd better deliver on that promise. So looks like Pete's got the roving mic.
I do have the roving mic.
So, yeah, they're all roving mics. Okay, go for it. Who wants to ask a question?
Passing over to my co-founder, Raf.
Yeah, so Derek mentions, and I think the stats were, you're seeing maybe 90% of deal flow and turning down about 97% of it. So the question I have is, and I'm playing devil's advocate a little bit, but if we had a 100 mil fund, is there good enough quality deal flow to deploy those funds?
Yeah, okay, the elephant in the room. Is it worthwhile? Is there going to be anything to invest in? Who wants to answer the question? Connie's put a hand out.
Is this close enough? Can you hear me now? So the answer is yes, but a $100 million fund having to return the returns that it does needs to also focus on global investments. It's a way of co-investing alongside experienced investors, being able to get some quick wins and exits that demonstrate early track record for your limited partners or your investors in your fund, and applying that experience to be able to help the WA pipeline. But at this point, I would say there's the WA alone is not enough.
Not anywhere near.
Not anywhere near to support a $100 million fund.
Anybody?
But it could be multi-stage. If it's a multi-stage fund that disperses on seed and late stage, it could address it.
Cool. Anybody?
I mean, the answer has to be yes, because otherwise I would be wasting my time and not doing what I'm doing. So I think there is, and we've got to. I mean, if you add up, what's the total funding in the last say year or two of Perth companies across all the? Come on, get the data. I mean, I'm sure.
You mean the data's not made up?
Oh, is it more than 100 million? I guess is the question. But Health Engine did 25 million, Moodle did 7 or 8 million, Sector's done 6 million, Isotona did 8 million.
And if you look at all the public companies as well, that could have gone private if there was funding available. There's clearly lots.
So the public is black and private is blue.
Right, but the yellow is the total, right?
Yeah. Yes, with.
So not cumulative. So every quarter we're writing $100 million. Is that what you're saying?
Well, no.
50 to 60 every quarter. There's the answer, right?
And I'm involved in 2 at the moment that are looking to raise about 10 mil each. So yeah, certainly I think we could do it.
Cool, that was yes. We can spend the money. Great. Next. I think Ram's got a question down the corner.
Ram Hemingway. First of all, it's like it's well understood that founders understand that the team, the market, and the idea, they're the key for any investment to attract investment.
Sorry, we have limited time. Do you have a question?
Yeah. The question is, have any founders or startups from WA attracted investments from Eastern VCs? If that starts happening, then there's going to be competition locally too. So that's the starting point. Eastern state VCs invest only in probably better markets or global markets from day one. I don't know what the criteria is.
I think we've answered that in terms of companies like VCs investing in WA, but the reality is that they don't care, actually, to be honest. WA is too small, it's too far away, and that presents the opportunity we've got. Like I think Gary mentioned, I've talked to most of them, others don't care about WA. That's cool, I love that, that's awesome.
Next question.
Hi, Peter Castro from Innovate Australia. The role of government, I think it's... I think it's good to acknowledge that there is a program, Extend WA, which actually is designed to help investors, just recently closed, and designed to help investors and startups to educate them. But what the community see role of government and what do you estimate right now? Is it enough involvement of the government? Is not enough? What would you like to see?
What do you want the government to do, apart from give it a whole bunch of cash?
Jasmine earlier mentioned the amount that the Queensland government's put in, which was, I think the latest was 700 million. Victoria's also put a lot of funding in, although that's moving more into the scale-up phase and away from startup. New South Wales have also put significant funds in establishing the Sydney Startup Hub, and South Australia put in 50 million to a VC fund, plus have also had this major development for to be a new tech hub in Lot 14, I think. So there's a lot that other governments are doing that where the investment hasn't been matched here. So the Western Australian government can look at what's happening elsewhere, and there is a lot more that could be done.
Derek mentioned earlier, actually, to your question, that there is a small task force of us who have been working with Startup WA to put forth a proposal of matching subcontract. So we've gotten positive traction on that.
Thanks everyone on the panel for sharing tonight. Your thoughts, it's been great. Trent Wheeler. I was going to suggest too, maybe it's not that the question is, do we need a $100 million fund, but maybe $100 million of VC capital available is what we need. We've had, going back into the history, for example, I think in '93 there was foundation capital. I think it was 25 million at the time, which was a lot back then, 25 years ago. But it's then tended to dominate the pool as well. So then you end up where you're not getting the range of expertise, the different criteria for investment requirements, a different basis and culture investing, etc. So maybe we want $5, $20 million funds, or a 40, 30, 20, 10, don't know. The other thing I was going to say, these are businesses too, just like the founders being entrepreneurs looking for funding. The investment, the VC is also looking for investment funds, and they need to justify their business case, their admin operations, and get their returns for their investors too. And they're just part of the value chain or the investment chain. So we need to be looking at where they're performing and where the exits are for them, etc. as well, and how that ties in. So I don't think it's just a discussion around VC either. It's a bigger overall capital picture too. But I think if we can promote our successes that we've had here, if we can build that critical mass of funding availability to attract more talent, because the money certainly does want proven expertise with teams that have worked together before, and then attract more tech people and capability and entrepreneurs and the money here as well. I think that's important, and so it's not, but it's also connectivity across to international locations, so the deal flow can happen from here as well.
So, Trent, do you have a question?
The final question is, what do you think? Do we need one 100 mil fund, or something different to that?
Okay, who wants to answer that one?
I don't think it should be $100 million fund. I think it should be multiple, whether that's 5 or 10. So 5 $20 million funds, or you could even have more money than that if it's matched, or 10. And I think the government plays a role, back to your question, sir. And I think, what's the government's metric or the corporate's metric? Is it impact? Is it jobs? Is it growth? I think multiple funds will do that on a greater scale, and plus it's diversified. I think whatever we can get going, really.
Yeah, anything else would be good. Mark, can you pass that back to Mark?
Hello, Mark Jenkins. The question I have for the panel is, do we need a WA policy-driven venture capital model? And the reason I say that is we live in the most isolated capital in the world. We've made a huge success of mining and mining technology, but not of the tech in that sense. And it does need to be driven by government, because government's all about policy failure, or market failure, sorry. And is there anyone here from government?
So I guess Mark's question is, do we think so? Government's role in not just the cash but the policy side of it. So is there a policy place to play? Do you have anybody got any experience with other governments having a policy position on VC investment, and or should WA have something? If that's
the question is more: does this community, can it drive and help government form policy and be a cooperative with government? Because you won't find leadership out of government. What you will find is a champion. And I have worked at senior levels of federal government, so I understand how they work behind the scenes. But what you will find if you've got the intent is they will follow. If there's votes involved, which is dollars and jobs.
Cool. All right, better get it off because Mark will forever. So, no, thank you. I think Bonnie's already started touching on. Can you expand
I
a
would
little
just
bit?
say policy does have a role. Probably the number 2 factors would be bankruptcy laws, being able to reform that. They're quite strict here in Australia compared to other ecosystems, and so there is a disincentive to actually do a startup because the ramifications of failure are quite long-reaching, whereas they're not the same in other ecosystems. So when the ecosystem, like Kauffman Foundation, they report, it's about churn. It's the number of company formations, number of bankruptcies, and that's how you measure whether an ecosystem is actually healthy. And so bankruptcy law has a huge role to play around that. And then payroll tax, which allows the fast growth, because technology ventures are heavily focused on talent. And if we can't recruit the talent, and if we can't, immigration visa laws as well, anything to do with talent. Want to add anything?
No, that was awesome. Yeah, well covered. It's got policies, but those are some wonderful. I think what's the national startup group called? There's Startup Australia. I think they touch on a bunch of those as well. So that's good. Good question. Thanks, Mark. That kind of yell it out.
So we heard Derek talk about how angel investors and sort of high net worth individuals saw the startup funding allocation as like their fund money, to sort of be involved with startups money. Should we, where appropriate, be trying to push people who probably shouldn't be angel investors into venture capital funding, and only sort of focusing on angel investment where it is people who have something to really add to startups?
Cool question. I think we've got Tracy here. So should angels be only controlled potentially? So I think what Conrad is asking is would it be better for some angels to go through a fund than on their own?
I don't know if it would be mandated, but I think there are people who make good angels and they can do a grand job at it and they would love it. And there are people who have money and maybe don't have anything really of particular industry value experience that they can bring, and they maybe don't have the time that it possibly takes for an angel to be a good angel. Those people would probably, those are the ones, I would steer them towards the firm, because a VC firm, because you get the firm to do the heavy lifting, it's the professional expertise, versus most angels who are good angels do it because they love it, right? And that it's partly philanthropic, because they're probably not getting as much for the time as they might, but they're putting in some money, sweat, and rolling up the sleeves, and they're getting stuck in. So I don't know if it's mandated, but I think it's just know yourself. And like I said earlier, the families that we sent to the Perth Angels, it was just to give them exposure to what the expectation is if you're going to participate as an angel. And they just came back and said, that's not for us. But that was good. We said, go look, if you want to do that, go do that. If you want to do this, come do this. If you want to stick it in the bank, stick it in the bank.
So the right model is probably, I think the Sydney Angels do this quite well, as a hybrid model where they have a sidecar fund and angels can invest directly as well. So angels can put money into the fund, invest across all the deals, and then make individual investments on their own. It's probably a great model.
No, I absolutely agree with that. And I do it because I love to get involved in the process, and I will get involved with the company if I can add value. If I can't, I leave them to themselves or get someone else in that can help. But I think for a lot of angels, that's the thing that drives them to invest in this sector, is the ability to help and make a difference. But yeah, there is also going to be people who just want to, invest in the sector because it's interesting, a bit like buying a mining stock, they're not going to get heavily involved in it or anything, they're just going to, so that would be more of the fun side of it, I think.
I think we just need to make sure that we're clear. An angel investment is not what we're really talking about tonight. Like an angel, I don't know what the average check size in Perth Angels is, but it's, you're talking about people that might do a 10 grand, a 20, a 30 grand, maybe 50 grand, maybe 100 grand type investment, but it's usually pulled around that level at a really early stage. I mean, I think we need to, and to me this is kind of reflective of where the Perth market is at, like the VC fund, we're talking $5 million checks upwards, maybe $3 million checks upwards, it's just a different profile of investment, different asset class, different value that you add with the money. It's probably not really a comparative type question from my perspective.
I was just going to add, I think it's also kind of an expectation of what you're going to commit. If you're an angel, you can speak better to this, but from my understanding of angels, not in extreme cases, but a lot of people do it as an angel where they know they can get into 1 or 2, 3 certain types of deals because they know they can add value. So they're protecting their money, they're deeply stored because they know they can add value. Whereas for most people, if you invest in a fund, we just promote, you need the depth and you need the breadth because most of them will fail. So you need the good returns, the 10x returns or 100x returns from 1 or 2 are going to make up for all the failures. And so you get that. And so if you're going into a VC fund, that's what you're doing. You're going into, for most part, passive investment across multiple deals. As a fund, we set up as a global investment fund because our thesis, we thought there wasn't going to be enough in WA. I've lived around the world, so I kind of was more partial to doing that anyway. But you need that depth, you need that breadth, you need diversity to get returns or to at least get the probability of getting a good return.
I'll just add a little bit of colour that might be helpful for people so one of the deals we did through Go Capital, which isn't a fund in the way we're talking about a fund, but effectively we have a financial services licence and we create a unit trust. And let's say we were investing $5 million into one of our investments. The commitment that we make as the owners of that unit trust is we'll put 5% of the money in. So if you imagine when we go to an investor and say, we found this deal, we looked at 100, we think this is the best one, we're going to make a $5 million investment, we've put in the first 5%, we would like you to contribute with us. Now when we do that on a $5 million deal, the people that make up that, we normally set the entrance price at $100,000. Now mostly they're probably larger angel type investors. So in our $5 million, we might have 1 or 2 or 3 sophisticated investors, family offices or other types of similar funding sources that are investing $500,000 to say $2 million, and then the rest is made up of say $10,000 or $20,000, $100,000 investors. So that investment we make, to me, is a really interesting first pass model at how you might get venture going, because we can then come along and go, we've now got a group of 20 people, we invest as one entity. That's really great for the company because we now, as in Go Capital, we represent that group of 20 people, but we only go in as one shareholder into that business. If that business needs to raise money, then we've actually now already got a pool of people that are probably really interested in following on, and we can kind of help facilitate that. So it's not venture per se, but to me, for anyone that's wanting to kind of take the reins and have a crack at this, that's a really interesting model to get started and do your first $5 million check, and you do a couple of those, and all of a sudden you start getting momentum, and that's kind of how we've done that. So, yeah.
That's cool, thank you. Mindful of time now for real, I reckon we can probably do one more question. Is that okay? Sure. One more question.
Neil behind you. Thanks, Dave. Say someone is looking for $5 to $10 million, and they say, "Oh, well, I'll go with a WA, VC rather than an international VC who has all the networks to blow my business up and make it great. They're the ones with the connections that will add value. So why should we have a VC here that maybe doesn't have those connections? What's attractive to that versus going overseas with other people with the global connections to add value, do all these other things?" And that's a really hard question.
It's not an either or. So no one type of investor can carry the deal all the way through to the 5 to 7 years that it will take to mature and exit. So you need a lot of, so good investors will have cultivated a strong pool of downstream and upstream investors that they know will follow in on the deal. So it's not an either or, and ideally you want both. You have someone local and you have someone global, so it adds value. It's not an either or.
Do we have the global to match the local? Local to match the global?
If you're asking the question from a founder perspective, you've got to do as much due diligence on your investor as the investor's doing on the company. So, you know, we keep talking about global, but if it's right for your business to be global and a global market's important, then that's a consideration, but it's not always the case. Like maybe you need national exposure. You can build some pretty awesome businesses just in Australia, even though it's a small market. So to me, that's just a question of there's loads and loads of funding sources, and you've got to make up your mind as the founder of the company, where's the right place for that? And it's money plus whatever that money comes with, good and bad. So, yeah.
Cool. Okay, I think we should start wrapping it up. What I'll do once, though, if I can, is perhaps go around the table for a little closing comment on the topic, on what you've heard and where you think we're going. Well, I'll leave it open. What would you like to close this on with regards to how we just talked about the fund, the VC, whatever it is, the model, the amount, and what you think the why we should have it, and what you'd like to see it do. We can start. Okay.
We've covered all of that. Let's just move to drinks.
Well, I guess from my perspective, I'd say that WA is alive and well. You know, if there was a fund here, I'd name 49 companies that I currently have positions with that I would refer directly to it. So, you know, I think really trying to work out what it wants to do, what it needs to be, and also I think keeping in mind that, you know, to the point of potentially a number of smaller funds would be the better way, because no two look the same. And I think having diversity across the industry is probably the best way forward. But yeah, key message is plenty going on in WA, and it's alive and well.
Well, I guess the question is, what action are we going to take out from today rather than saying the talk fest, I guess. So what are we doing? We're lobbying the government, correct, Bonnie, in some shape, way or form? Corporates, to pension funds, yep. Family offices, yep. Okay, we're also trying to convince some other people to come back and help out. That's right. If we know anybody over East, you know. I don't know. Anyway, so yeah, take some action, you know. Pass it on, that's what we're trying to do. Yeah.
I think that's a good point. At the end of the day, the message is we have all the ingredients. We have talent, we have ideas, innovative ideas. I constantly hear about East Coast VCs who say there's interesting pipeline, you know, that comes from WA. And having looked at a couple of deals myself, it is interesting. I think the ecosystem needs to mature a bit more. $100 million fund, one fund won't help it, but multiple funds or multiple sources of funding structured in creative ways is great, and leveraging multiple sources of talent and sources of capital. So all those ones I mentioned.
Well, I'd just like to thank everyone for being part of the conversation. The $100 million fund, personally, I think the challenge with that is it's not going to invest in enough companies. So I think having multiple smaller funds is probably what we need. And also a $100 million fund, if it's a 10-year fund, it's investing for 5 years, then what happens then? So, the next one, which is 200. But anyway.
To answer the question, I think Perth's an awesome place, and it's awesome people, and best weather, best education, and it's this awesome global secret. And I think when we talk about being the most isolated city in the world, it's not going to be long before that's actually a really positive thing, because the world's a pretty scary place. So, maybe we need to advertise that. So I think just keep doing what we're doing towards building a pretty cool ecosystem is really important. I think that it's not a single $100 million fund. It's you know, $5, $20 million or $10 million, I think the appetite's there, I think the money's there, I've made that clear. I actually think there's enough businesses, because we're not talking about the next 1 year, we're talking about the next few years. I think that's there and coming, so it's all before us. Perhaps the challenge is not even the entrepreneurs, but the people that need to get the appetite to find the funding and put the product together and kind of have the entrepreneurial thinking on the funding side. Maybe there's a piece there. But
volunteering for that role?
I'm doing it. I'm doing it. I think I said before, I'm happy to. You know, I've got the corporate venture fund and the private equity, and if people go, I really want to do that, how do I do it? I'm very happy to share the stories, because there's a fair bit of learning there. Anyway, so I think the war stories, the hard work. So yeah, I think that's the opportunity for us. It's exciting.
Agree with you all. I think we have the ingredients there: investors, deal flow, entrepreneurs. So I would challenge the WA government to just step up and do what the other states have done, because I think it can be a very, not risk-free, but de-risked investment for them to accelerate WA.
Just got to get started. Crack on with it.
Thank you all so much. Action speaks louder than words. Who's going to do it? Have a crack. Got to do it. And the VC has to be an entrepreneur to start with. That's what's come out loud and clear. Decisions, not conditions. Who's going to make the decision to actually do it? You guys are doing it. It's happening. The question is almost rhetorical, because it is happening. I think the ending is that this is a successful ecosystem with a fund on the way in one way, shape or form, or funds that are going to this point. Lots of exciting, positive conversation that this is going to happen. Put the beers down. And we are really in the lucky city. Thank you all so much. That was enthralling, and I think there's a lot of upside happening. Could the audience please thank our awesome panel?
And could the audience also please thank our awesome facilitator? Thanks, Steve.
My pleasure. I was very lucky. I really enjoyed that. Thank you for letting me sit amongst these awesome people. Thank you to Techboard, Raf and Peter. We wouldn't be here if it wasn't for you guys. Have a good night all.